Welcome and get ready to dive into the thrilling world of investments where numbers dance, money talks, and the unexpected always keeps us on our toes. So what is the best income generating ETF? For many investors, covered call ETFs are very popular because they offer high dividend yield and provide some downward protections in a declining market. But many covered call ETFs underperform in a bull market due to the nature of covered calls. Is there a better alternative strategy that can generate high income at the same time allowing price appreciation when the market rallies? Well, if you watched our previous videos, you'll know that SPYI was designed with a clever tweak to do just that. Well, today, we are going to introduce another ETF that is even better than SPYI. Not only does this ETF offer an unbelievable 17% dividend yield, but it can also make you money even when the market moves sideways. Ladies and gentlemen, get ready for the ultimate income generator, SVOL, the Simplified Volatility Premium ETF. Before we dive into the details of this ETF, we want to show you SVOL performance compared to popular covered call ETFs such as JEPI, JEPQ, XLYD, SPYI, and finally, the S&P 500 index itself. For this, we chose a one-year period between July 2022 and July 2023 for this quick analysis. As we know, the market had a big drop in the second half of 2022 with aggressive interest rate hikes by the Fed. And as the inflation appears to be under control in 2023 and the Fed poised to slow down the pace for further rate hikes, the market consequently rebounded sharply. The selected time period allows us to peek into how SVOL reacted in a bear as well as in a bull market in comparison to popular covered call ETFs. What is striking from these charts is that SVOL has the best total return among all candidates. It even outperforms the total return of S&P 500 index over this period, which is impressive to say the least. What is more exciting to note is that SVOL has the smallest dropdown when the market deteriorates in 2022 but keeps up with the rally in 2023. In contrast, popular covered call strategies lose more money in a declining market but also lag the broader market when the market does turn around. So what is so special about SVOL? Well, we'll dive into the details in a second. But first, if you like our content here, please hit that like button and subscribe to the channel below. Thanks so much for the support, and now let's continue. So for beginners, SVOL stands for Simplicity Volatility Premium ETF. This ETF was funded in May 2021, so it is quite new. The ETF takes an alternative approach to deploy capital. From its fact sheet, the fund seeks to provide investment results before fees and expenses that correspond to approximately 1/5 to 3/10 the inverse of the performance of the CBOE Volatility Index, commonly known as VIX, short-term futures index, while also seeking to mitigate extreme volatility. While the fund's short VIX position provides investors an optimized exposure to monetize the premium in the VIX futures market. A modest option overlay is deployed into VIX call options to help protect against adverse moves in VIX. So rather than investing in traditional assets like equities or writing covered calls to generate income, SVOL shorts the VIX futures to monetize the premium in the VIX future market. Here is a snapshot of the VIX future structure at the time of this video. There is something really interesting though worth pointing out. The VIX future has an upward sloping shape, where near-term VIX levels are less than long-term VIX levels. This makes sense because the VIX measures market volatility, and the longer the expiration date, the more risks a contract carries, and thus the more premium it has compared to the spot price. This pattern, which is known as VIX contango, makes shorting VIX futures profitable. Just imagine you, the investor, short a 30-day VIX future at 17. Now, assuming nothing catastrophic happens in the next 30 days, and on the expiration date of the future contract, the VIX level stays somewhere close to 15, then you make a profit on the contract. Now, because contango exists in the VIX future market most of the time, shorting VIX futures allows SVOL to generate such a high return like we saw earlier. As long as the market is calm and not disrupted by a catastrophic event, SVOL strategy will make you money as shorting VIX futures will be profitable. But from time to time, black swan events do happen in the market. In such cases, VIX levels can shoot up to the sky, as demonstrated in the 2007 to 2008 financial crisis, as well as in the early 2020 with the onstart of the COVID pandemic. To hedge against such tail events, SOVL allocates a small portion of its money to purchase out-of-money UVXY calls. This way, if volatility goes haywire, the short positions may suffer, but the call options will rise in value, acting as a hedge. And here is the fund's holdings. We can see that about 20% of its assets are used to short VIX futures expiring on October 2023, January 2024, and March 2024, while about 0.4% of assets is used to buy VIX calls to hedge against market volatility spiking up. SVOL currently has an expense ratio of 0.5%, which is on the same level as JEPI. Now, considering SVOL's performance easily beating S&P 500 and JEPI, the fees are very reasonable. Since inception, SOVL's assets under management have soared to over $360 million, doubling since last year. Now, because the fund is so new, we don't have much historical data to show how this ETF would perform if the market is under an extended stress period. Will the purchase of out-of-money VIX calls work during a crisis like the 2007 to 2008 severe recession? Well, we certainly hope this ETF will live up to its promise in such a tail event. Overall, SVOL looks really promising to give investors a boost in income with an unbelievable 17% yield. With SVOL, you get the best of both worlds, high dividends and upside participation in the market. And its volatility hedge makes it steady during tough times. If you're looking for an income-boosting ETF that can handle the market's ups and downs, SVOL might just be your hero. Remember, investing always carries risks, so it's important to do your research and consider talking to a financial advisor before jumping in. For now, thank you for watching, and we'll see you in the next video.